All right, it is May 17th, 2020. I am L. Jermaine Russell, and I am a little perturbed. I recorded a whole section of all of my trades from the past week, and my laptop died, and I have to do it all over again, which is fine. I don't mind talking, but I just know I'm going to get exhausted after this because I have other things to do. So, let's start to dive in, right? I just want to go straight into how many trades I made this week. I made 14 different trades. Some of them were kind of overlaps from previous weeks, like CODX and GOLD, INO, MVIS. So like, I just want to give an opportunity to go over not the really the ones that I earn money on, because I think that's what everybody usually wants to know. Like, oh, how much money did you earn? Which is fine. I will have a better system where you can be able to see off of an Excel spreadsheet, and you would think I've been to school and I should be able to do an Excel spreadsheet, but I think part of me is just lazy on that front. So I just need to get that there. But I do know what works for me, and that is what I'm going to share with you. So if you like anything that I say during any time of this video, please hit the like or subscribe sign on this page, and feel free. I do put up weekly videos, particularly in the stocks and some type of squats dealing with fitness of yoga or any other thing that's related with fitness. So with that being said, I want to go over particularly three different stocks that I felt like had the biggest lessons for me, just because of the way that the market has moved them. And I will start with my very first stock, which was AMC. So AMC, which I thought was going to go a little bit higher than it did, but as you can tell on the year chart, and this is each candlestick represents one day on this chart right now. See, one day. Um, Let me expand it out so you can see that is a long-term chart. It has been trading since what, 2014, I believe. Yeah, so around 2014 in March it started. It was open to trade, and it hit an all-time high of $34, right? And since then, it has been declining, and it's declining dramatically, particularly even after all of this coronavirus stuff. Um, so what happened with this stock particularly is that the main reason why I bought this is that it came out with rumor news from Twitter showing that Amazon had some type of interest with merging with AMC. So if you think Amazon and AMC, and you think, hey, this sounds like a buyout opportunity, particularly at the price that it was trading at AMC. It was relatively cheap, right? So this is not a stock that I would typically trade. Main reason is because the 200 EMA is above the 100 EMA, and the 50 EMA is underneath the 100 EMA. EMA stands for exponential moving average. So, these colors don't change throughout all the wherever time frame I change to. So, so because that this is how this stock is when it comes to the EMAs, I don't like trading this. But the rumor got me in it. So once I heard that there was a rumor of Amazon buying AMC, who would not be interested in this? And if we'll take a look at it on the intraday chart on Monday pre-market, it really did do exponentially well, right? The minute that the rumor hit, it was running, and like I mean running. It went from 432 to 755, right? $3 a share pre-market. If you were in any point of that time, you would have been just fine. Uh, I was not, when I found out about this, I was not a firm believer that it will hold this this price point. I knew eventually it was going to come down, which it did. So on the intraday chart, as you can see, we have the 50, the 100, and the 200, right? This purple line is the VWAP I use as a bullish indicator. Really, it could be bullish or bearish. If the price is trading above it, that typically means that the price will go higher. If it's trading below it, that typically means the price will go lower. Even though I try to use all indicators together, um, I know that there is some type of possibility, a probability that the stock could go higher if if it's trading above the VWAP. But as the market came to open up, it fell down, and anytime when a price typically falls down, it would fall down towards its 200 EMA. And as you can see here, the MACD is showing a significant decline. The RSI shows that it's oversold. It was oversold twice, right? It did it once, it did it twice when the market opened. Now, this parabolic move here is just something that out of momentum and strength just because of the news itself. So I bought this twice. I bought this twice thinking that, hey, it can go higher. And I'm thinking that it was going to retest $7, which it never ever did. Again, throughout the week. And that goes to a testament of how those EMAs on the long-term chart where you have the 200, 150, in declining order, when it's like that, it will snap up and then snap right back. So this 755 was just a little bit higher than what it was on the year chart where it says $7.50, I believe, or $7.04. So, just being the fact that it went up that high was, was a good thing. It broke out. That was a definite breakout. But also because of, like I said, the EMAs, it's going to cause that snapback. And that was definitely what I needed to see and to be able to share with people so other people can see it too, right? So we see it snap back, and not only did it snap back once, it did it twice, right? So typically when there's any type of a pullback, that pullback happens usually in three segments where you have one, and this was two. So I'm surprised there wasn't a third one on this one, but I guess because of how strong it was already and it was already oversold, that it was given an opportunity to for the shares to like recycle. And when they did recycle, the stock went from a little over 490-ish to $6. So if I had waited to see it really pull all the way back and not buying when the market first opened, which is another lesson, buying a stock before or right when the market opens, like 15 minutes before the market opens, is never the best idea. I know I'll probably say this in another video, and I'm going to say it again. It's like you waking up in the morning and someone is trying to give you all this information. You haven't been able to process anything yet. You have no idea what's going on. You didn't even have your first cup of coffee. And even with that first cup of coffee, you got in the shower. You got in the shower over here, but over here, you still didn't even get to have your coffee. So your brain is not even working. You don't even know how to identify yourself for the day. Right? The day just opened up. So on this day that just opened up, I said, hey, let me buy you. And not only did it not hold this 560-ish area like I anticipated, it said, no, I'm not fully awake yet. Let me drop back down. And that's what it did. It came back down, came down to the 490-ish area, maybe 485, and then it popped back up. So on this type of stock, if we go back to the year chart, I typically only like to buy stocks that look like this, with these EMAs like this. I typically like to only buy them I shouldn't say when, but only for a day trade. I don't like buying it and then holding it long term. It is specifically only day trade, nothing else. Now, if there's a reverse, then it has the opportunity to say, hey, maybe it can go a couple of other days, depending on the candlesticks or any other indicators that might suggest that it can go higher. But once I see a stock that does this, it is only a day trade. There's nothing else. There's nothing else it can do for me. Now, only unless the news is about Amazon. And the news was about Amazon, and it had definitely had me holding and hoping that Amazon was going to come out with some type of are only following my indicators. So instead of selling at once I bought here, instead of selling at the $6 area and just recover my 20 cents a share and then be up for the day and be out, I end up selling at 5.49, right? Losing $40 a share just because I didn't adhere to my rule. And as a trader, a day trader, or any type of person who figures investment, if you are not following your rules, then, or if you have not even created a rule, let's take a step back. If you haven't even created rules to day trading, like I mean that you've sat down and thought about, hey, this is my strategy, this is my entry and exit plan, and if all else fails, when in doubt, get out. If you haven't even thought about that, then this is not for you. This is not a time where you can think that, hey, you can make easy money on the market if you just throw some money at the wall. Now you're just gambling at that point. You're not doing any research, you're not doing any due diligence, you're just hoping, holding and hoping. With that being said, I was holding and hoping, right? I was holding and hoping that Amazon would come out with something. I was looking on Twitter, I was looking in the SEC filings, I was looking everywhere. Couldn't find anything. But so once I really got the idea that this is not going to do anything for me, I did get out. And I got out with a marginally small loss, 40 cents, right? A share. So that wasn't horribly bad. But just know that when you have stocks that have this type of movement, this type of range, that the news plays in the part, that the long-term chart plays in the part, that you have some indicators, whether it's the RSI, MACD, exponential moving averages, the VWAP, your mother, your father, whatever those indicators are, and that is part of your plan, and you stick to it. This is what you stick to, and you will never, ever, ever go broke if you stick to your plans, right? And that's how it was for the remainder of the week for me. That I just stuck hard fast to my plans, hard fast to my rules, and once again I had another positive week of gains. So and sometime this week I got to figure out, navigating through Excel again, and really learning how to put my entries and stuff like that in there so I can show you what my profits and what my profit loss looks like. So it's just not this guy who is talking about technical charts, but you don't know how well or how bad I'm doing. I'm actually doing pretty well. I just slightly overworked and a little lazy when it comes to that part. So that's AMC. Let's go on to like I said, I did trade 14 different stocks, but there was a couple of stocks that I definitely want to just get a small look at. Mara was another one. I don't think I traded this on my Thinkorswim platform. I think I traded this on my Robinhood account. And with this one, the only reason why I even decided to trade this is just because it was for cryptos. So in the crypto space, this stock was moving. And let's once again look at the long-term chart, right? This is where we always begin. This is something that I do not care to trade at all. But I have been watching these types of stocks just to see how it performs, whether it's a low float, well, particularly if it's a low float. Anything less than 100,000. I prefer anything less than 20,000. 20,000. I mean 20 million before I even get into this type of a play. I would not even look at it. But its float is 8 million, which is extremely low. So I decided, I said, you know what? Let me give it a further look through. And as we can see here, I got in, which day was this? I got in, oh, this was from last week. No, this was this week. Wait, I sold this around the lunch hour when it was hitting resistance at 1 and was trading 2 times its float of 8 million. It was better as only a day trade to the resistance since it is the reverse of my strategy. So see, even here, I even mentioned that it was the reverse of my strategy. I said I forced trade after scanning the market and noticing that this would run up from 80 cents area. Main reason why I thought that because it was trading slightly above all three EMAs at 80 cents on the intraday chart. And then on the year chart, excuse me. Then on the year chart, risk at the 100 EMA was 9 cents below the trading price. So that was relatively like 71 cents. So as I tried to place my order in the Robinhood account, the price was beginning to ramp up. Seconds later, the stock was trading around slightly above $1. It was up on earnings, and on this day, actually, when it was up, and the day that was up, actually all financials was doing well too. So this was Thursday, the 14th. So all financials was doing well. And let's go on to so see, here goes the 200 EMA, right? And like I typically say, it will go up and then it will snap right back down, you know, just because that's the 200 EMA. Typically you're not going to get stocks to really trade above that and stay there to sustain itself. It will trade above there. There are times where it will trade above the 200 EMA when it's shaped like this, right? But typically it's going to come right back down, and we saw that with AMC, and I'm pretty sure there's going to be plenty other examples after this. No, not that I traded, but what other stocks that it's going to snap back, and you'll see it. But there will also be some, like I said, the caveat that it will jump right back up. So once again, with Mara, I bought this in the 90s. I bought it at, with an average price of 92 cents. This is the day that I was referring to, that Thursday, where it came out with earnings. And I was just literally just watching it. I went to my scanner, and my scanner had this up, and I said, hey, this is trading right at 80 cents. Is right there. All three EMAs are right there beside each other. And as I was like, hey, let me put in an order at 82 cents. Robinhood account, it's hard to really manage the Robinhood account. Really, to be honest, like, I love Thinkorswim. It's easier to facilitate movements on Thinkorswim, to buy, to sell, and stuff like that. When it comes to Robinhood, it's a little bit more difficult. You have execution issue. You really have to either, place. You have to really place. There's no changing, like, because the navigation on the platform is horrible. To me, it's horrible. So, I'm not finding the best success on Robinhood, but that's no excuse. I think that if I follow my plans accordingly, then Robinhood would match exactly like how my Thinkorswim matches. But anyway, when it came to this, came to that move, I anticipated it to come back, and it did. Bought some, and I didn't sell at the dollar. I sold right at 85 cents. I believe I sold like somewhere around here, because I was just getting tired of dealing with it, and I felt like it was going to come back down, and which it did, and it started to come back down all the way through. So when you are watching stocks and you feel like the stock can do what you anticipated to do, definitely take that risk, unless something shows you otherwise. And Mara, being that is crypto related and the financial markets was moving positive, the financial sector was moving positively on the day, that was a risk that I could have taken, and it could have been out 20 cents, only 20 cents a share, but it still would have been an effective trade if I just traded it properly. But like I said, this is typically not something I would like to trade. This is also something typically that I feel that would have been more of a waste of time, because it was only 20 cents of a return. But if I had bought at 80 cent level like I thought, I was thinking that on the upside, it can come up to $1.18, maybe $1.20, right? So I was really thinking 40-cent upside for what, off of 80 cents, maybe 9 cents of risk, because at the time when it was trading near that 80-cent area, and the EMA was showing that it was trade just around that 70 cent area, or no, yeah, 77 cent area. So 3 cents, not even 9 cents. I think I put down 9 cents. Right, so it wasn't much. So I'm just saying, look at the risk reward. The risk reward definitely will lead you to profitability. So even though I didn't earn like I wanted to on this one, I still was able to identify where the lesson is in this, which there was a lesson definitely. Let's go to another one. Let's go to. I don't want to talk so much, but I definitely want to go over these trades because they were so good. INO uh, um, is another coronavirus stock that with this stock it is more focused on human DNA testing, right? Or the medicines that are related to DNA, where they can use those nucleotides to match the pathogens that might be related to coronavirus, or at least being able to identify what is related to coronavirus. Um, so when I bought this, and I this was on the 13th, so this I said that I sold this at 13.65 during the pre-market, and then pulled back from 13.90. My previous sell order was 14.25, which it did come up to the 14s like a couple of days later. I was not trying to hold all the way through, um, but this is the issue that I had with INO, right? So let's go to the chart because we're going to go to the 12th, right? So I know I bought this a couple of times. You see a whole bunch of buy sell orders back here, but essentially right here on the 12th, they came out with earnings the day before. So when they came out with earnings the day before, I bought it in the pre-market, in the after hours. And when I bought it in the after hours, it was really premature. I could have waited. They weren't going to come out with the release of their earnings until about 4:30. I bought like right around 4:10, maybe 4:15, way too early. It definitely came right back down right after that. So let me show you why I was even keeping this on my watch list. So the main reason why I even kept this on my watch list, and I'm sorry I keep on going back and forth with the chart, um, that the EMAs, right? You got the 50, the 100, 200. This is perfect. This is amazing. What else is also amazing is before it came out with earnings, it was basing here at this $10 area. So once it based at the $10 area, and then you see that there is a range, $10 to $12, right? This range right here, I told you I bought this on after hours. I bought this after hours. I said the 12th. I don't know why I wrote down the 12th on my notes. But I bought this in after hours. This candlestick right here alone, for me, if there was no earnings that was coming out, I would have bought this. I didn't need the earnings to be the impetus to my buying. The main reason why I bought this is because this previous red day is below that green day, right? So let me just move. So this is what I saw, right? This candlestick closing higher than this red candlestick. So that must mean that, hey, the buyer is here, which, well, the people that's buying and selling is 21 million, 34 million, right? So, so this could lead to a bullish situation. This green candlestick right here, and then this red stick right here, you know, even though it's 27 million from this green candlestick and then 45 million in this red candlestick, it was still showing that there was another 13, what is that, 20, like, the volume, what is that, 21 million shares of buying that was happening here. So that 45, 27, that is a little under, was that 18 million? So you got 18 million, and then 22, what was it, 21 million. So just in that sense, that 21 million difference, the 18 million difference, that buying alone just says, this smells like there's a lot of buying going on in this range, this $10 to $12 range. So if I were to buy, this would have been perfect, right? So when I'm waiting for earnings to release, I got really impatient with myself, and patience is not like my biggest virtue, and so I had to really, you know, be compassionate about to myself about why I even bought it at that price, at that time, at that hour, even though it was showing that it was going to be overbought, which it did. It showed it was overbought. It also showed that, you know, there was still some selling going on. So even though that happened, and it must have been something with the the level two, that suggested, hey, why don't you buy? Didn't do what my rules really suggest, is waiting for the release of earnings. So once the earnings are released, then it becomes a lot easier to understand where the direction of the stock is going. It came down to 1060, right? I bought at 1227, so I'm already down $1.50 a share, right? Bad position already. But the one good thing that this had is that it was showing not only that people were taking interest in it, but that they were coming. They had it was a shelf offering, and that shelf offering was showing a price. I think it was like a lower price than where it was, or a higher. I knew that they were trying to sell some shares. So typically, what happens when a stock that shows, or at least what I have seen, when a stock releases some shelf offering and you do get a pullback like that, and I think the pullback was to the shelf offering was like 1050 of something of that nature. When I looked in the SEC filings, when you do have a pullback like that on that day, the next day it does tend to trade higher. I'm not 100% sure why. That part doesn't make any sense to me, but it will do that. Let me see if I wrote anything about that, because I remember reading it in the SEC filing. Yeah, I remember reading in the SEC filing. I'm not going to go back and forth and try to confuse myself, essentially, as I'm trying to explain just the technicals of it all. But essentially, the SEC filing said that it was going to come down to like, it was going to have a shelf offering of like 1050. So I said, oh, okay, that explains this. But also the sentiment associated with this stock also showed that it could go higher. I showed you the candlestick on the day chart. This intraday chart also shows that, hey, the trading of this price, not only is it oversold now, right? It oversold once and then oversold twice, but once that second time came and it bounced and it was finding some support at that 1016 area, it was starting to trade towards the 50 EMA. So what happens when it trades towards the 50 EMA is that if all EMAs start to converge, right? Like what they're doing here, the same thing that they did in Mara, right? Once they start to converge, they have an opportunity now to make a decision. And the decision is, do they want to trade towards the VWAP, or do they want to stay below the VWAP? And in this case, what happened is that they started to trade towards and above the VWAP, in which the VWAP was now was starting to come below the 50 EMA once the market opened. But that was when the market opened. So in here, you would not have been able to probably conceptualize if there was any type of upward buying that would have happened, you know, because it did try to test this support here at 1143, but it was showing higher lows, right? Higher low, high. Well, this was the low, and then the higher low, and this is a higher low, which is also another technical reference to use when trying to determine if a price has found some type of support. So that 1123, 1123 back here, 1123 back here, 1123 back here, back here, back here. So it was showing that 1123 could definitely find some type of support, and it did. And then 1145 came, right? So what happened is that I ended up buying some more shares. So now I have 300 shares of this stock. I lowered my average price, and I think my average price came to like 12.15 or 12. It was like 12.15, maybe 12.17, and then I end up selling up here into the strength, into the momentum at 12.82. And when it was starting to run up like this, main reason why I sold it because I said every time when a price starts to run up to being overbought, I don't care how high it goes afterwards, but I need to make sure that I can sell it into strength. And then if it pulls back, fine. Look for an opportunity to get back in. And that I did. I found another opportunity to get back in here at 13. I'm thinking it's going to hold over 13 and then start going to that 1450 area that I mentioned. I was like, okay, this is it. It's going to go to 1450. Or, the candle from the day before is going to suggest it at all that it's going to go a little bit higher, and we're going to have fun, right? We're going to have it. We're going to have what we need. Didn't do that. It came up to 1350 and then plummeted from there. So now I'm down again. After buying at $13. It came to 12.60-ish, and it held support there. So I was really down like 40 cents a share. And then once it popped back up, I ended up selling up here. It wasn't at $14, but it was at 13.65. So that second trade was really good for me. But also at the same time, because I bought more shares when the stock opened, as opposed to just holding that 12.27 and selling into the strength when it did run up, it did cause me to lose a day trade. So I did have to hold, right? That was another reason why I end up holding this position, because it could have done just like this. This is not something that I wanted to be part of, and I'm glad that I got out before any of that happened. I did say it was going to go up to 1450. It did. It did eventually get up to 1450, but that was in the after hour on the pre-market of 1440. In the pre-market on that Thursday, not on the Wednesday, which I anticipated. So I was slightly rewarded for making a bad trade. That's what I'm trying to hone in right now. When you make, and I say you, and I'm looking, at my screen, thinking really to me, but I'm sharing it with you. When you make a trade, you are really trying to minimize risk. And, being that I was rewarded for a mistake that could have been potentially disastrous, right? Right here, and here goes 1, 2, 3. Like, this is strong selling going down. This is strong selling from 1, 2, 3, like those 3 hours. Like, it was strong selling, right? But if I didn't look at, hey, let's look at what the RSI says, MACD says, and just sell it and not hold on to it because it didn't get to your price yet of 1450, or because I said just give what the market, or take what the market gives you, right? Don't try to force anything, just take what it gives you. And that's what it did. But it's really like looking at the price actions around this EMA. That EMA is so, like, for me, it's so critical, because now I have an idea of what price the stock could pull back to if I buy shares, right? Just like in Mara. In Mara, I said, hey, pull back to this 80-cent range where the 20 EMA is, or 200 EMA is, just because that's what it can do. That's what the EMA is there for. And at least for me, right? I use that as a gauge for risk. on the downside. And that's what it did. It came here. And yeah, granted, it might come down a little bit lower, maybe 20 cents lower, but at least you have an idea that, hey, if it pulls back, it can pull down to the 200 EMA. Is this buying opportunity worth the downside risk? You know? So that's what I want to hone in on when it came to INO, mRNA, or MARA, because mRNA is a whole nother biotech company, which has been one of my value stocks since December, maybe early January. Um, it says INO. Let's go over. We did Mara, we did INO, we did AMC. Let's go into these last two, which is CODX and CODX. Oh man, that one. Like when I say that this right here is the main reason why I prefer to have my EMAs in the order that they are in. Where you have the 50 to 100 to 200. I prefer it that way because you can have exponential upside with this type of stock. If you look at Nvidia, Nvidia, it's the same thing. Nvidia is doing the same. This is not something that I just pulled out of my ass. This is something that really, really does happen, where the stocks can go exponentially higher just because of these EMAs. So you use them to your benefit. So here, yes, I bought this quite a couple of times before. It never fails, right? That this stock itself has momentum behind it, and I still don't know what it's going to do on Monday. On Monday, it possibly will come back down. Excuse me. It'll possibly come back down to like 15. I don't know, but them too. They were coming out with earnings, and because they came out with earnings on the 14th after the market. I think after the market closed. Let me see. Let's look at this. Let's look at this one again. So they came out with earnings. I think it was they came out with earnings on the 14th. Yep, it was the 14th that they released their earnings at 4:30. May 14th, right? So I was in this stock over here because I said if their earnings is coming out after hours on the 14th and this was the 13th, hey, why don't I capitalize on some of its growth now? So if we look at the year chart, we'll see here, this is where I end up buying. I bought on this strong ass green candlestick. And this is where candlestick education really comes into play, where you have a candlestick that has no wick, right? And if you look on this red candlestick, it has a wick right here, wick right, there's a wick right here, wick right here. There's smaller wicks in between, but typically when you have a strong candlestick like this with no wick, it makes it difficult for it to go higher, right? Without any news. There's no wick on this candlestick. What happened the next day? It got slammed down. There's a smaller wick on this candlestick. It did go a little bit higher, but it came right back down. That is also something that I try to look for. Is if this candlestick replicated itself from the past, 9 times out of 10 is just going to return to the same behavior, right? Where it's going to get slammed right back down, which is fine. Come to be slammed back down, and you can see why now I bought it so many times, because it will go up after buying, and then once I know that it has reached its maximum, just sell it and sell it before it starts doing any downtrending. And so this is why I feel like it could downtrend just one more day, just because it tends to do that after a strong green candlestick like this. But not only did it come out with earnings, but on the 14th, but that day, wow, that day before earnings, that 13th, it was just so phenomenal. Um, it's so phenomenal because I didn't even anticipate this. Like I bought it a couple of times. I bought it here. No, I sold here. I bought it back here. This was just doing that again. I have to figure out these price points because sometimes I can't see it on the actual chart itself. But nope, you still can't see it. I can't see it. Let's see. Either way, I I sold some here and then sold some here. But this is the candlestick that I bought at. I thought it really should highlight. It's not highlighting it. But I bought like right here in the 1770-ish area. Then I sold up here in the 18s because I didn't think it was going to break 19. I was like, oh, okay, it's not going to break 19. As you can see, the EMAs are all coming across over the VWAP, which is that purple line. And then when I started to see that the lines after I sold, when I started, and I used my day trade, after I saw it crossing over the VWAP, um, I said, you know what? The 50 and the 100 cross over the VWAP, let me buy some more shares. So I bought some more, not thinking that it wouldn't go any higher, and then I sold for like a 70-cent return. 2 day trades, right? So now I've used my day trades. So now I'm thinking, and this is where you're knowing your day trades, or even knowing how the momentum of the stock is going to move, so you won't have to over trade. Knowing those components, if I had known that I didn't have to sell my first initial trade in the 17s, I could have held that all the way through and then sold over here, right? At 27. So that would have been a $10 a share trade, right? That would have been $10 a share. But I bought it twice, sold it because I underestimated it, and which is fine. You can't go broke taking profits. However, if you are more meticulous, you can see if a stock would go higher and not waste your day trade. So I'm going to try to correct that a whole lot more this week, where I focus not only on just the buying at the low support, but identifying what other indicators that suggest that a stock could go higher or hold its returns. So that's what I'm planning on with this here, or that's what I should have planned better with this here, where this stock just ran up, and the only reason why I sold, and then it put me in the pattern day trader jail. I was flagged. Only reason why I sold because I left my sell order open, thinking that I would influence the market participants to push the stock higher, but I wasn't anticipating it going all the way up to 27. I was like, the most it would go to 25. Now I remember seeing it coming to 25. I was like, okay. Then I moved it to 27. I said, there's no way it's going to go another $2 a share. I underestimated the stock. At this time, I was at the beach teaching my sister and her friend yoga. So I wasn't even near my laptop. So I missed out on that. That was my mistake. I could have canceled my order. But also at the same time, at this 4 p.m. area, 4 p.m. time, I'm not available to trade. Thinkorswim doesn't have it open for retail traders. So at 4 a.m. is not even accessible to me. So selling it at $31 the minute that the pre-market opens was not a reality. But if I waited till 7, then 7 I could have sold it at $30, and then or $31, even $30. I would still got $3 more a share than at 27. But either way, it could have been of greater value, right? If I was able to hold, and I'm talking about if I held that $17 price point where I initially got in at, now we're thinking $14 a share, right? So it's just being meticulous with the trades and ensuring that not only that you're adhering to your playbook, to the and to the plan that you have in place, but you're also trying to figure out what you need to do as far as organizing your day trades, because the organizing day trades is really what's going to keep us from uh, organizing day trades will prevent people from being successful if they misorganize it. If you organize it properly, then you will always find some type of profitability. Right? So, you know, look at the MACD. I mean, not the MACD, the EMAs. Look at the MACD. Look at the RSI to really gain a full assessment. And then my last trick, all into full circle on why having day trades is so important. You know, APT. APT, I will always say never marry a stock, never um, get too in bed with one of them, because they always, you know, you can't really trust it, particularly in this market. You just know that biotechs are moving. So because biotechs are moving, it gives you an opportunity to really earn. But with that saying being said, you have to have day trades. You have to have day trades available. When I bought this stock, because I was now flagged as a pattern day trader because of CODX, I didn't have any day trades. And even though you can call Thinkorswim or you can text, email Thinkorswim and say, hey, can you remove this flag off my account? And they give you, I believe, up to 3 times in the year. Excuse me. Because they give you up to three, I had a burp, sorry. And because they give you about 3 times out of the year where you can get that flag removed, you still have that opportunity of not, over trading, right? But it still takes about a day or two for that flag to be removed. So I didn't sell this stock after I bought it. I ended up having to hold it, and I held it until Friday because I was traveling from Virginia Beach back to New York because of errands and priorities that I had to take care of in New York. So with that being said, I will show you. This is the year chart, right? It is doing everything that I wanted to do. It's trading over the 50 and the 100 EMA. The 200 is down here, right? I still think on Monday that it could come back down, but I'm not 100% sure. It is showing some weakness here. I'll be lucky if I could sell it at 1550. Wait. No, oh man, this is not where I'm at. Okay, the wrong place. Let's move this forward. I thought it looked weird. There we go. Now that looks better. Okay, so with this being said, this green candlestick right here is when I bought it, and I bought it because it's a strong ass candlestick, right? But also, look at what it did the last time I had a strong candlestick, and this is what I was saying with CODX. You have a strong candlestick right here, no wick. Next day comes down, right? Even though this has a wick, it went up and then returned back down. It didn't do that here or here. Here it did. It had a strong candlestick, came back down. So it was, to me, already had enough evidence to say that, hey, if it has a strong candlestick, it could come back down. So I was anticipating that it would come back down on this day. That it didn't do. That it did do. The next day it came back down. But on this day when I bought it, if I still had day trades, I wouldn't have to worry about it. And I will show you where I bought in at. So where'd you buy it, man? You bought right here, right? Right after that parabolic move on up to the upside, right? It went from 1350, all the way up to 1635 before pulling back and going up to 17. So I ended up buying when it made that deep pullback, and I said, if it pulls back to some type of support here in the 15s, I'm gonna start considering when to buy. I was trying to get a little bit lower. Actually, I wanted to get in the 1520s because I was showing more support there, but I couldn't get in there. I just was fumbling with my phone trying to really place an order. But as you can tell, like when I bought it, it ran up to 17. I could have sold if I had if I had a day trade, right? I didn't have a day trade. But what I did do is when it pulled back, I bought some more, anticipating that in the after hours or pre-market, particularly the pre-market, that it would retest 17 and I can sell and I wouldn't have to worry about day trades or anything like that. It closed at 16.45, maybe 40. On my profit loss for this trade, I was up when the stock closed because it closed at 16.45. That's right, it closed at 16.45. So I was like, oh okay, was it 16.45? It was somewhere around there. Do I see it? 16.35. Yeah, 16.35. So when it closed, I was up. But when the pre-market came around, and particularly when the market open came around, and as you can see here, ooh, I love how the EMAs is trading below the EMAs right here. It's trading below the VWAP, right? And it found support. It found support here at this 1475, and it's not just on this day. One, two, three, four, but five back here. So that 1475 became a real crucial price for this stock. But not only did it like started to fail pre-market, and in the pre-market you will see the bid and the ask. The bid and the ask, if it's lower than the actual previous day closing price, then typically the stock will go down. Also, Fridays, since this whole pandemic has been happening, most stocks have been downtrending. So if it's been downtrending, and you see that the bid and the ask, if you see the bid and the ask is lower than the previous closing day price, and that you are seeing that the trading price is below the EMAs, most more particularly is below the VWAP, chances are that it's going to test support or go lower. I thought this was going to go lower, and I was driving at this time. So during this time when all of this was happening, I was driving from Virginia Beach to New York, and I was looking for a place where I can just pull over and just focus on this. But I didn't want to waste time, standing on the road either. So I wanted to give this stock some time, a chance. And then when it finally got some chance, I didn't even see that it was starting to run up towards $16. Actually, when it did run up towards $16, I saw it when it was like right around here, that 16.30, 30-ish area. And I said, oh, okay, as long as it holds and all the EMAs cross over the VWAP, maybe it can go a little bit higher and all that stuff. But what I didn't take note of was the RSI. What I did take note of is that the resistance was at 16. But I didn't see the RSI. It's hard for me to really navigate through a mobile phone like I do on my laptop. So this laptop, 20 times better than using a phone in my experience. But it also came right back down. So this was like, what, from 1:30 till 2? So 30 minutes, I had an opportunity to really sell this at its highest peak, and then, but I got greedy because, like I said, the previous closing day was at 16.35. On my profit loss for this stock, it showed that I not only lost the gains that I had when I bought in the 15s and it ran up to 16.30s, but I had lost that, and then I lost more because of the price that I bought in at. And so that was what, like I forgot what, well, right now, I'm down like 50 cents a share, or 60 cents a share. But at the same time, because I did not want to sell, and I wanted to cover all of my loss, everything that I lost on that day, from on that Friday, from that Thursday. I wanted it all back. And mind you, it's from your the time that you open the trade, and the time that you and on the day, like what you have made on the day and since the time that you opened up the trade. So that's the price. Those are the two categories I was looking at to recover all of my loss from. You know, I could have just, took that 40 cent profit and called it a day because I would have still been up because since I opened the trade, I would have been up, but on the day I would have been down because remember it ran up to 1635 the day before, and then on the day Friday it came all the way down to now at this price point 16. So that's 35 cents that's not being accounted for per share. So here I'm being a little bit overly Virgo, being over because I'm like, I want all of my money back, as opposed to just taking what the market gives you. So this is another valuable lesson. You take what the market gives you. So when the market opens up on Monday, I have to take what it gives me because I can see this to to possibly go down. There's a wick right here on that red candlestick. Even though the momentum is green, the momentum is green, so it's very possible. 50 is still over all over the EMAs. Very possible that on Monday, if it finds that support at the $15 area and covers all of this, with some good news or something like that. But I don't know, and I can't guess that. The only thing I can do is prepare by identifying my support and resistance, which I just said, $15. $15 is support. Nice resistance at 15.40 ish, right? So if I have to take a 20 cents loss on the stock that I opened, I will take that regardless of what it did on Thursday, regardless of what it did on Friday. If it tests that 15.40 ish area, then maybe that might be a good idea to sell. So we shall see what APT. But I definitely wanted to hone in on this lesson just because having day trades is super 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 important. Even though I'm profitable this week, I could run into a situation where I don't put myself into the most profitable position because I am not monitoring my day trades properly. So I'm going to leave it at that. Monitor your day trades. Take notes. Take great notes. Take even the notes on how you're feeling, the emotions, what you're seeing. What analysts might have said, what you thought you heard on Twitter, anything. Write it down because all of those things play a factor into how we trade, right? So, with all that being said, I believe I've talked enough. I've talked an hour. I've talked an hour. There's an hour of this overview of particularly really just 5 stocks. I have one particular stock that I'm very, very interested in for next week. I am holding APT, GRWG, and VERU going into this upcoming week. But there's one stock that has all of my attention. If you want to know what that stock is, wait for the next video. If you haven't clicked to subscribe, do that now. Ring the bell and hit like for that you like this video. And if there's anything that you ever want me to discuss, I love to talk. I love discourse. Please put comments down below, and then we can continue keeping this trading community available. Once again, I want to thank Tim Sykes, Tim Bowen. Them two have been instrumental in my trading, and I just want to just really pay homage to them for that. So I want to say thank you, and I am looking forward to a next trading week.